Mark, here's how the figures stack up to start this year. 10-year yields are up 23 basis points. The S&P 500 just hit an all-time high. Have we finally seen the decoupling of equities and rates? Can they finally move in opposite directions?
Well, we think it is a year where, it's time to get your portfolio back in balance because there is room for upside both by investing in stocks and by investing in bonds. I was up in Davos last week and heard central bankers expressing confidence that we're likely to get a soft landing. So some of that is certainly built into equity markets, but I don't think you can discount it fully at this point.
Mark, good morning to you. Fresh from the hills in Davos. What's going to drive you and the team? We've done a lot with Paul Donovan's, the hedonism of the consumer. So I'm curious to know whether you have weaponized FOMO or slight sobriety after a week on the hills and a lot of evening partying. Which camp are you going to fall into?
Well, Manus, as you know, when it comes to hedonism, I'm going to have to leave that to you and Paul Donovan. But I think for us, focusing on the consumer spending in the U.S. and how well that has held up is certainly one of the key factors we're watching, as well as the Fed's reaction and function towards employment, which, of course, has held up well, and that has contributed to the spending of the U.S. consumer.